All right, before we go back to the phones and for the midweek meltdown, we're going to chat with Clinton Wilkins, who is our mortgage guru. And the Bank of Canada is keeping its key interest rate target on hold at 0.25%. Clinton Wilkins, what do you think of this? What are your thoughts on this? It was to be expected, right? Safe to say?
It was definitely expected, and, really, we think that it's going to stay low for quite some time. Some economists are projecting that, 12, 18 months down the road, we may see some increases. Some economists are saying it could be years down the road before we see any increase to the key overnight rate. It really is going to depend on what happens with inflation, Todd. And we don't know. We don't have a crystal ball on really what's happening from day to day, let alone month to month. But, inflation still is on the lower side. And, that's something the government's definitely interested in. Some economists are stating that they're going to keep the key rate low until we're out of COVID altogether. And obviously, we're optimistic. I think there's lots of good things going on in the economy, but there's still a lot of rebuilding that's going to have to happen in Canada and really across the country.
How's this affecting people? Well, it doesn't affect, but if rates go up, that impacts people's variable lines of credit, variable mortgages, and just let people know how this affects their finances if, in fact, when rates do go up.
Eventually they will go up. That's reality. But anybody who's in a variable rate product is really kind of hedging their bets against things like inflation. They're hedging their bets, against, what a fixed rate would look like. So when they do increase down the road, anybody who's in a variable rate mortgage will either see a higher payment or a longer amortization, depending on what type of mortgage product they have. If you have any revolving debt that's secured to the prime rate, then your cost of borrowing will increase. So that's something certainly to take into account. The interesting thing, Todd, is many more clients today are getting a variable rate mortgage than ever have in the past. So I think there's a lot of optimism out there. Obviously the variable rates are much lower today than they have been in before. New home buyers that are getting a high ratio insured mortgage today are getting rates, as low as 1.35 on a variable. So there's certainly some room for those borrowers to take some risk. Fixed rates in the same type of product are over 2%. So there's certainly a little bit of wiggle room there, and certainly it's going to be interesting. And we watch every day, and we're listening to what the economists are saying, and all signs are pointed towards variable being historically cheaper for consumers, and we really believe in that as well.
And you don't feel that, as you already mentioned, that these rates the Bank of Canada is going to move these rates up anytime soon. Anyway, that's safe to say, right?
It's going to be months, if not years, down the road before we see any increases. Now, obviously, the key overnight rate is really the one lever that the government has to stay inflation. So if inflation starts going through the roof, yes, they will increase that key rate just to bring that, the inflation down. But the government intentionally brought the key rate down in March 2020. The reason that they did that was to really increase the spending and keep liquidity in the market because, there's a lot of uncertainties, and we needed it, and I think that it's helped consumers, businesses, banks, really keep things rolling. And, I'm glad that the government is on side with keeping it low during this rebuilding process. And, once the economy is in a situation where, the inflation has increased, I don't think anyone, is going to be sad about some increases down the road. And we all know that they're going to go up, but I think enjoying the low rates right now, obviously is very beneficial for, you and me, the end consumer.
Great stuff, Clinton. Thank you so much for your continued participation and expertise. We appreciate it, and talk real soon, my friend.
Thanks, Todd.
All right, take care. Clinton Wilkins, our mortgage guru.